Hi everyone, myself Murugan, happy to present another interesting video from EQSIS. In this video, I'll be explaining you a very interesting financial term, market capitalization. So this is a part of a series where we're explaining the financial terms in detail. So in this particular video, of course you learn what is market capitalization along with its types and you get to know its real life usage and applications. So first, what is market capitalization? Market capitalization in general stands to talk about the size of the company. Let me take this as a very first example so that if you have an existing myth, I can break with this particular question. Let's say there is a two company, whereas the State Bank of India share price is trading at 500 rupees approximate, and meanwhile the HCL Technology share price is trading at 1100. With this given information, if I'm asking you a question that which one is the big company, and by any chance, if you see the share price and if you conclude HCL Technology, and I'm sorry that you're wrong because your understanding on size of the company is not right, because you take a factor called share price to indicate the size of the company, which is not right. In order to judge the size of the company, you need to know little more details because the share price, after all, talks about per unit value of a company, not the whole value of the company. So we need to know how many unit also exist. So if you want to answer this question, you need little more information about it. So if you want to know the size of the company, then you need little more information, as I said, that you need to know the number of shares in this particular company has. So if you look at the State Bank of India, it got close to 892 crore units of shares exist, which are issued, which are the paid up, with the share price 500 approximate. So in total, the total size of the company, which is 4,42,000 crores. So by any chance, if I wish to take State Bank of India private by buying all the shares, then I have to pay 4,42,000 to each and every existing shareholders, and then I can take it. Basically, for every share, I pay just 500, but there are 892.46 crores of shares I have to acquire in order to fully take this company. So I hope you understand that 4.42 is nothing but the market capitalization. Meanwhile, we also have HCL Technology. As I said, although the share price is 1100, but the number of shares in this company is after all 271.37 crores. These numbers may be slightly approximate. The market capitalization at the same period when I'm recording this video is close to 2.95 lakh crore, whereas the State Bank of India is 4.42 lakh crore. So merely by comparing the share prices, we should not be concluding the size of the company. So by seeing these two factors, you can clearly say that State Bank of India is much bigger than the HCL Technology. The market cap is the true indication of the size of the company. Why am I talking about this? Because a lot of people trade in shares and they say that Murugan, I love to trade with a company which is a kind of small cap to medium cap. So I wish to trade with the companies with the share price between 100 to 500. My question is, just because the share price is 500 doesn't mean it is a small cap company. I will be explaining the small cap, mid cap, large cap slightly in detail, and you will also get to know how to use this as a way of diversifying your portfolios in the same video. So make sure you stay tuned. But the point is, sometimes people invest in a company with the market cap of 30,000 crores, 40,000 crores, expecting them to actually buy 6 times or 7 times, which may not be expected in 10 lakh crores or 20 lakh crores. May be possible, but it's not that easy. But the point is, the same comparison they do with respect to share price, which is not right. Because the share price of Shree Siemens may be like 26,000 rupees, but this is no way you can say that it is a no much bigger than State Bank of India or a Nestle. So I hope you got some fair understanding about the share price and market cap. Let's go and see the types so that we get to know its usage as well. The type is like you might have heard of something called large cap, mid cap, small cap. And this is just the convention. Okay, there is no standard rule to define the large cap, mid cap, and small cap, but these are the terms that are widely used. In fact, in some cases, you might have seen the micro cap and mega caps. which are actually mega cap is even beyond the large caps, and micro cap is can be below the small caps. But the very standard convention is using large cap, mid caps, and small cap. This cap is actually indicates the capitalization. So if any company size is more than 25,000 crores or more than 20,000 crores, approximately, can be termed as the large cap companies. We're going to use the term approximate. There is no benchmark. See, about 10 years before, the number one company has the valuation of 3 lakh crores. But today, the number one company with the valuation of 18 lakh crores. So, of course, as the time changes, the benchmark for large cap, mid cap, and small cap do changes. In India, the large cap companies may be like anything about 20,000 crores, but in US now, it's more than $6 billion. That's a convention they are using it. So, it can actually different. But if you want to have a relative scale, what you can actually do is top 100 companies can be large cap, between 100 to 200 can be a mid cap, and below 200 companies are actually can be a small cap company, still 200 to 500. Below 500, sometimes people may use the term micro cap. So these cap is just the capitalization. This talks about the size of the company. That's all. Murugan, how these types can help me in constructing my portfolio? If you look at the, it's the behavior of large cap companies. They are pretty stable. Okay, they are pretty stable, but they offer a very low growth rate. But doesn't matter, because if you really invest from a very longer term perspective, you want a bit of predictability. So you need to make sure that your portfolio can takes the major share of large cap companies. And the large cap companies are mostly reliable, and they have the scalability, and they have the size, which all actually plays advantage to them. And finding such stock is not that easy. Okay, sorry, the finding such stocks is also fairly simple. So finding a large cap company to make as a part of our portfolio is possible. Remember, they are less risky when compared to the medium caps and small cap companies. And they offer high liquidity, because large cap companies are actually at the huge, so they are highly traded in markets. So you don't have much of slippage, and if you wish to accumulate, you can accumulate. Even for a fund house, the mutual funds, accumulating these companies is not that very difficult. Of course, with the size increases, they have to pay little more difficulties, but still large cap companies are fairly liquid when compared to the mid caps and small caps. If you look at the mid cap, it's like a mediocre, I can say that, because they have a bit of above average growth rate. They grow slightly more than the economy growth. But if you look at the risk, it offers a moderate risk into this. It's not that very difficult, but still I can say it's not that easy. It's somewhere in between, because out of 300 400 companies, some companies offer a very classic qualities in their business, but they may not be a frontline companies. These companies can even become a multi-bagger companies. But finding this company is not that easy, so we have to spend some fair efforts in finding these companies. Okay, and they have reasonable liquidity. But for retail investors, this may not be a problem. Even a mid cap companies are may not be surprising, but make sure that don't run behind those companies just having a high cap but not having a proper business. So make sure that you work on understanding business to capitalize it. And there is something called small cap. These small caps is what the retail people interest, because a very small cap penny stocks generally on top of rumors. And remember, these companies offers a high return potentials. They look very glamorous, but they carries the inherent risk. The company size is so small, so you have to see beyond numbers, because sometime, I don't want to say it deliberately, sometime their books can be cooked. So you need to validate the numbers. You need to do this forensic audit. So you need to look at the qualitative aspect of the analysis before you conclude anything. So if a small cap companies are really appealing to you, still you need to consider a very limited portion in your portfolio. But remember, often you might have heard of circuits, buyer freeze, seller freeze, no buyers, no sellers. These terms are very common in small cap companies. So the small cap companies, sometimes even if you wish to exit, you can't exit. You get trapped because it offers a very low liquidity. There may not be a buyer at all. This may not be the case with the large cap companies, may not be the case in most of the mid cap companies, but the small cap companies having these as a very common problem. So that's something which we need to understand. And let me talk about its usage. The large cap companies, the price behavior, the historical price behavior, generally tells you how this overall economy is actually growing. If you wish to know, I know, like the use cases, like there is something called Nifty, Sensex. These averages are constructed by understanding the fair amount of proportion to the large cap companies. Okay, but the Nifty is actually computed with the base model of free float, whereas the Sensex's weightages are actually considered with the market capitalization. So this is not a video I'll be talking about the index weightage contributions, but you just need to know there are about 50 companies. On what basis we're going to give weightage? It is actually based on the market cap in terms of Sensex. For a Nifty, it is actually a free float. Okay, and like Dow Jones Industrial Average, I think it's a market cap. So, like, you might have seen various index in the world consist of various companies. So, and then you get the movements in the indexes, and those movements are actually the weighted averages, right? That weights are actually computed with the help of free floats as well. So that's how it actually works. And so if you wish to form a portfolio from a very longer term perspective, the recommended portfolio is to have a fairly 50% as a large cap companies. Mid cap companies can have a 30%, and small cap companies can have about 20%. That's the recommended portfolio. But if you wish to have a very conservative portfolio, which is what Axis recommends to our clients, because we don't wish to take add more risk to the existing client portfolio. So in general, by default, if we provide products are slightly conservative. So in that case, if you see, the large cap contributes 70%, mid cap contributes 20%, and small cap contributes just about 10%. So the kind of risk what we take in the existing portfolios is just close to 10 to 20%, not much. If you really want a very high growth portfolio, your financial commitments are very aspirational, but the what you contribute to the market is very less. But you still understand what you're doing it. If you wish to have high growth considering a reasonable risk, then you can actually have still a large cap companies close to 35%, 40%, 25%. These are the convention which I recommend, but it can actually go different from people to people. But this is actually good for you to manage your risk and the returns. But well diversified portfolio, knowing what you're actually doing, can help you to reach your financial commitments. I hope you got this interesting idea about it. So if you want to have little more usage about it in the analysis, I'm sure this can also be used in um, you know uh, in if you look at the trend in market capitalization, then you get to know how they are actually progressing. The trend in share price most likely mirrors the market capitalization. If there is new issue, or if there is a drop in issue, then it can actually have a different. So the market capitalization talks about the size of the company in the recent times, and sales to market capitalization, which is a very interesting metric widely used by fundamental analysts, especially on the relative valuation perspective. And profit to market capitalization is also very interesting. So these factors will help us to relatively compare one company to another company. So in that case, it can also help us to understand the valuations. And if you want to know some related terms, like the market capitalization, we have something called free float market cap, equity capital, enterprises value, intrinsic value. In one line, if I wish to finish this, that free float is also a kind of a market cap, but it's not a whole company. Rather, the shares are actually in the public hands, so it's freely traded in the market. It does not get stuck in some basket at somewhere else. So the shares without the promoter, the shares without the some institutions may not be considered as a free float. Okay, and equity capital is a kind of the book, what it represents, the paid up capital along with reserves. So market cap is what the real price of the share and to acquire the whole company. But equity capital generally comes with the face value, of course. So that may not be a real value, but adding along with reserves may reflect the no reasonable value of the company, and that is from the book perspective. That's called equity capital. If you come across the term equity capital, they are talking this by referring what is there in the books of the company. And if you want to know about the enterprise's value, we will be actually having a dedicated videos for each and every terminology what I'm explaining in this. But just as a part of the same video, I'm just highlighting it. So if you want to know what enterprise's value, let's say if I wish to buy a whole company, and that company market cap is about, let's say, 1 lakh crore, but that company itself got 30,000 crores cash, then what we do is I buy the whole company by paying 1 lakh crore, but indirectly that company comes with me with 30,000 crores in form of cash. Let's say the company not having much of debt. Okay, so the real enterprise's value, what I paid, is just about the 70,000 crores. Though that talks about the enterprise's value. And intrinsic value is what the buyers or sellers, their worth they derive by discounting their earnings along with their expectations. So that's how it actually works, called intrinsic value. The intrinsic value is what any fundamental analyst wish to find in order to buy or sell that particular company. So that talks about how much it's worth for them. That depends upon the earning ability of the company along with its discounting factor and what the kind of risk it has, the economy it works, by which we find the intrinsic value. We will be talking about these things in the separate videos because every terms needs deserves the time to explain in detail. So what next? If you're interested, probably you can we can have the comment section to ask questions and respond. So we may have some quiz to post it, and you can actually do it. If you wish to share any questions, like you might have heard of top 10 companies in India, top 10 companies in US based on market cap. So if you wish to add more contents, you can definitely post those contents there. And if you wish to learn a lot of fundamental analysis concepts, or if you wish to be, if you want to know the flow of content, if you want to know how to invest from a longer term perspective in just one day, we have a 9 to 5 full day live interactive session, a kind of training program we have, and those that's generally delivered by a team member, Shripati, and who takes care of that particular area. And we also have the a tool which actually provide the investment guidance. So if you wish to invest from a longer term perspective and you want an app let you know what to buy on a week on week, month on month basis, okay, with just 3 clicks you can actually do it. So if you're interested, you can actually go and check our website, which is EQSIS.com, and there must be a tab called investing. Under investing, I hope you will find it interesting. So if you have any questions, of course, you can ask your questions in the comment section, and relevant links will be there in the description. So you may also find some interesting coupons. So make sure that you check out the descriptions as well. Thank you. Thanks for watching this video till this minute.